Hello everyone and welcome back to the Iraqi Dinar Hub channel. Today's news is nothing short of monumental and you'll want to stay until the very end. A wave of speculation is turning into something much more concrete. Word is spreading fast that the Iraqi dinar has finally revalued. And this isn't just another rumor. This one is reportedly backed by something massive. Official approval from the International Monetary Fund. Markets are reacting. Online forums are on fire. And dinar holders everywhere are scrambling to understand what's really going on. Has the RV officially happened? What role did the IMF play? And what does all this mean for you and me? We're going to break it all down for you now, clearly and completely. Let's start with what's driving the noise. Dinar revaluation. Over the last 2 days, rumors have gone viral that the Iraqi dinar has officially revalued, with whispers of surprising exchange rates showing up across forums and banking chat rooms. Some unconfirmed reports say the new rate is now well above $1 USD, a massive jump from the previous number we've all tracked for years. This spike in activity is being mirrored at redemption centers, where more transactions are being processed, and domestic Iraqi banking data shows unusual movement. There hasn't been a public statement yet, but something significant is clearly underway behind the scenes. People are watching every digital screen and calling contacts non-stop. Is this finally it? And why is it all happening right now? The answer may start with 3 powerful IMF. According to several reports this week, the International Monetary Fund has formally signed off on Iraq's monetary reform blueprint. This isn't symbolic. It's a technical green light that could mean Iraq is now cleared to introduce a new, stronger exchange rate. When the IMF gives its approval, it usually means they've reviewed the country's financial systems and found them stable enough to support a significant rate adjustment. This kind of endorsement is huge. It not only reassures global banks and investors, but also puts Iraq in a different financial league entirely. Economists are calling this a definitive turning point, and it's precisely what's triggering the investor frenzy we're seeing now. What does this frenzy look like? Global investors are rapidly taking action. As soon as word got out about the IMF's involvement, everything changed. Private equity groups, hedge funds, and even small-scale currency holders started pouring into the market with renewed urgency. Reports have surfaced about bulk buys in regional exchanges and heavy interest from the Gulf nations. Financial influencers, major blogs, and dinar-focused communities are now buzzing with non-stop updates. Where the dinar was once considered a speculative long shot, it's now being viewed as a near-term play. In places like the US and UAE, redemption centers are staffing up, anticipating large waves of activity. The energy has shifted from slow patience to immediate opportunity. Now, let's talk about what people are hearing about the rate. While no official figure has been posted by the Central Bank of Iraq, several insider accounts suggest that a rate over $1 USD is not only possible, but likely already being implemented in limited circles. Rumors mention ranges between $1.30 and $1.75, and some whisper of tiered rollouts or special categories for different groups of dinar holders. But the critical detail is not just the rate, it's the credibility behind it. For years, speculation ran wild with unrealistic numbers. Today, the shift is rooted in actual policy movement. The rate increases being discussed are backed by structural reforms, policy coordination, and international support. People are even seeing previews on private banking portals and at limited redemption sites. So how did we get here? The key is reform. Iraq didn't simply wake up one day and revalue its currency. Over the past 24 months, the country has undergone an intense reform process, especially within its financial institutions. The Central Bank of Iraq cracked down on illicit currency activity, expanded its digital finance systems, strengthened its reserves, and implemented anti-corruption measures. Laws were changed. Dirty networks were cleaned up. And perhaps most importantly, Iraq re-established working partnerships with organizations like the IMF and World Bank. These changes built the platform for sustainable revaluation. The intention wasn't a quick pop in value, it was long-term credibility and fiscal strength. And that's what we're now seeing pay off. But what does all this mean for regular Iraqi citizens? The impact of a currency revaluation goes far beyond headlines. It affects everyday life in powerful ways. When your currency gets stronger, your purchasing power increases. That means lower costs for imported goods, improved fuel prices, better savings power, and stronger wages. A more valuable dinar makes global participation possible, again for travel, trade, and online commerce. The black market, which has drained the economy for decades, finally starts to lose relevance. Families can budget, businesses can plan, and more importantly, people start to believe again in their economy and in their future. That's the kind of shift this revaluation is triggering. So, is Iraq still using a fixed exchange rate? That's a crucial question. Most experts believe Iraq is still operating under a fixed system, but it's now heavily managed with tighter controls. The difference today is that the gap between the official rate and street rate has narrowed significantly. This is important because it suppresses black market abuse while providing predictable numbers for business and trade. A floating rate may come in the future once the financial infrastructure matures further. But for now, the fixed rate system gives Iraq the best mix of stability and progression. It's a smart way to manage the shift and avoid chaos during this historic transition period. Digitalization is another reason why the revaluation is becoming possible. Iraq has rapidly rolled out digital banking platforms, mobile payments, and e-verification systems to track money flows and reduce fraud. These upgrades are more than just convenience, they're giving the central bank real-time tools to monitor inflows, outflows, and currency misuse. The push for digital systems is helping Iraq defend its reserves and enforce compliance with new banking laws. It also allows for better data collection on imports, exports, and national account balances. For the Iraqi people, this means faster payments, cleaner transactions, and a modern financial experience that protects their purchasing power. IMF support doesn't just mean approval, it usually comes with a full strategy. When the IMF backs a country like Iraq, it's often tied to a structured roadmap that includes long-term benchmarks, technical assistance, and access to global finance tools. Iraq could now be in line for sovereign credit upgrades, lower interest loans, and even debt restructuring deals that free up more money for domestic investment. This kind of involvement sends a strong message to the world. Iraq is open for serious economic participation. And once international banks start moving in, others follow fast. This cascading trust could reshape Iraq's entire future. Inside Iraq, the banking system is already showing signs of transition. Numerous local sources report that banks have internally updated their currency rates in systems not yet visible to the public. That's normal. Most banks conduct back-end tests before rolling out public-facing changes. Customers have reported small but noticeable shifts in cross-currency conversions and wire transfer values. These early signals suggest that a broader rollout could be imminent. The central bank appears to be managing the process carefully, avoiding public panic or misinformation. This kind of preparation is a strong indicator that the RV is not just a concept but a current event in motion. And what does this mean for dinar holders outside Iraq? This could be the opportunity that many investors have waited years. Full but caution is key. As momentum builds, scammers will attempt to take advantage. Always verify exchange offers, check for official channels, and be wary of too good to be true rates. Once official redemption centers open, they will likely require documentation and careful vetting. Take your time, do your research, and be informed about tax impacts. If handled correctly, this moment could represent the most significant financial shift of the decade for dinar holders. But smart action is what will separate winners from the misinformed. Now the critical question: will this revaluation hold? Many financial experts say yes, and here's why. Unlike past speculation driven by hype, this shift is built on reform, structure, and oversight. Iraq didn't revalue in a vacuum. They prepared through policy, banking modernization, international partnerships, and transparency measures. If the rollout is done in controlled stages with IMF support and clear rules, the risk of rapid devaluation is low. Stability is the goal, and Iraq seems well positioned to maintain it. The global markets are now watching to see how effectively the plan is executed, and so far, the signs look promising. Finally, what comes next for Iraq? Revaluation is just the beginning. Iraq must now focus on long-term economic development, education, housing, tech industries, agriculture, and private sector growth. Currency strength should follow real productivity, not just oil. But this reset gives Iraq a critical chance to attract investment, boost employment, and raise living standards. If the government stays focused and reforms continue, Iraq could become one of the region's most dynamic economies. This isn't the end of the story, it's page one of a brand new financial era. The eyes of the world are on Iraq, and for good reason. To wrap up today's massive update, all the signs point to something historic unfolding. With IMF backing, new digital tools, updated banking infrastructure, and surging investor interest, it appears the Iraqi Dinar revaluation is no longer theory, it's happening. But the smart move is to stay sharp. Avoid hype. Stick with facts. Watch the banks. Listen for official updates. For those who've waited patiently, this could be the start of your reward. And for those just tuning in, now is the time to pay attention. We'll be here every step of the way, covering this transformation as it happens, so stay locked in.